Welcome back to Synaptic Dividends. Today, we are putting a true investing legend under the microscope, the healthcare giant Johnson & Johnson.
So we're going to answer a really simple question today. Is J&J's legendary dividend a rock-solid source of passive income, or is it just kind of coasting on its past glory? Let's push all the headlines aside, let's just dive right into the hard numbers and see what they really have to tell us. Okay, so first up, and this is always the most important pillar, the safety check. Before we get into the history or the growth or anything else, we have to answer the most basic question of all. Can the company actually afford the dividend it's paying out? To figure that out, we use my absolute favorite metric, the free cash flow payout ratio. Now, don't let that name scare you off. It's actually a super simple idea. Just think of it like your personal budget, right? Free cash flow is like your take-home pay after you've covered all your bills. So this ratio, it just tells us what percentage of that leftover cash the company is using to pay us, the shareholders. It is the absolute truest measure of affordability. So what's J&J's number? It's sitting at 65.2%. Now, what does that mean? Well, as a rule of thumb, anything under 75% is what I'd consider very safe. So at just over 65%, J&J has this huge cash cushion left over after paying its dividend. That's money they can use to reinvest, to innovate, or just to weather any kind of economic storm. So for our first test, safety? Yeah, that is a clear, easy pass.
So a safe dividend, that's the foundation, right? But what about the company's history? For a second pillar, we are looking at long-term commitment. In other words, does J&J have a real track record of rewarding its shareholders, not just for a little while, but year in and year out? Okay, get ready for this number. Johnson & Johnson has increased its dividend for 63 consecutive years. Let that sink in. 63. That's not just a track record, that's a legacy. It puts J&J in this super elite group that we call dividend kings, and it proves that for them, raising the dividend isn't just a financial decision, it's literally part of the company's DNA. But what about the rate of that growth? You can see the long-term 10-year growth rate is a very healthy 5.9%. Now, yeah, it has slowed down just a little bit more recently, but that's not really a sign of weakness. It actually shows a mature company that's balancing these steady dividend hikes with the massive investments it needs to make to stay on top in the world of healthcare and tech. The commitment, though, is just undeniable.
All right, now for the ultimate test of strength. Pillar 3, the crisis test. Any company can look great when the economy is humming along, but how does its dividend hold up when things get really tough? How does it perform under maximum pressure? This, right here, is where the truly great dividend stocks separate themselves from everybody else. And honestly, the results here are stunning. During the 2008 financial crisis, one of the worst meltdowns in modern history, J&J didn't just pay its dividend, they hiked it by a massive 10.8%. Then fast forward to the 2020 pandemic shutdown. Guess what? Same story, a 6.1% increase. This is powerful, powerful proof that when the going gets tough, management doesn't just protect the dividend, they actually grow it.
All right, so we've looked at the safety, we've looked at the history, and we've looked at the resilience. I think it's time we bring it all together and deliver our final verdict based on what these numbers have shown us. So let's just quickly recap what we found. First, the dividend is safe with that healthy 65.2% payout ratio. Second, it's proven with that incredible 63-year Dividend King track record. And finally, it is resilient, showing a history of strong growth even during the absolute worst economic storms. So let's go back to our original question. Is Johnson & Johnson's dividend the real thing? Based on these numbers, the answer is an emphatic yes. It's safe, it's reliable, and it is thoroughly battle-tested. This dividend is not just living on its reputation, it is earning it every single quarter. Now, this was just a quick look at the core dividend numbers. If you want to go deeper and understand the full business model, the competitive advantages, and the management behind these numbers, check out our long-form analyses on our main channel, Synaptic Investing.